Many investors believe the bottom of the market has finally been hit. They're wrong.
Okay, so you're currently worried. Oh my God, the market is bouncing. It's up 670 points. You may be holding some short positions that you opened last week. You might have bought some put options that you bought last week or possibly this morning. In the video I posted last night when I'm going with a student over a coaching session and looking for some strategies for Deutsche Bank and some other stocks, at the end of the video, we re-examine the S&P and the Dow and Nasdaq, and we go over a couple of variations where we were discussing how the markets could bounce today, which they did, and how the markets could actually bounce the following day, which is tomorrow. Should you be concerned? Is this something you should be really worried about? Is really the market turning around, and is it going to go and touch the highs again? The answer is in the W. Well, there's two type variations of market bottom, and so the W is just a name for representing a market bottom or a temporary market bottom before the market goes higher for a while. So the two typical variations are these. One where the first V is lower than the second V. And this is typically a bearish pattern where the market could temporarily bounce, but then shortly after that it's going to start falling. The second variation of a W is where the first V is not as low as the second V. And a very important characteristic to observe on the second V, the market will typically drop on a much lower volume on the way lower, but yet it will bounce on a much higher volume on the way up. So please keep this in mind as we're going through examination of a few indexes and a few particular stocks to arrive at the conclusion of what is going to be happening with the market over the next few days. So with the S&P 500, this is what we got. Let's check out the volume, because when the markets are turning, when they're moving in the opposite direction, typically that is the first indicator that I like to look at, because it tells you what's really going on. And clearly we're seeing as the market is falling, it is doing that on a slightly higher volume than the volume on which it was rising today. So there's your number one giveaway. This rally may not be sustainable. If we compare it, for example, going back to February 2nd through February 9th week, what do we see? We clearly see that these gray bars, which represent the positive volume, the buy volume, okay, they are much higher than the red bars, which would represent the selling volume. And if you look on February 9th, that Friday when the market was tanking 1,000 points, look at the volume, okay, the positive volume, the buy volume on which it was bouncing back. How does this compare in relation to the volume that we're seeing today? Even though it seems like numerically the markets are bouncing back significantly, okay, we're noticing that they're doing it on a much lower volume compared to the previous bounce on February the 9th. What else do we see? Well, we see it's gonna be a very tough situation for S&P 500 to close this gap. That's why I have this arrow drawn here to bring your attention to this gap, which was created on a Thursday when markets were opening significantly lower, and that's when the market tanked 723 points last Thursday. Typically, the market would need to carry some significant momentum in order to close this gap. Well, already looking at the volume in relation to the volume we had on February 9th and in relation to the sell volume, we're not seeing the volume increase. We're seeing a temporary, a moderate volume type situation, which makes me think that the volume would have to significantly accelerate tomorrow in order for the S&P to have any kind of chance of actually closing this gap. What is going to happen? Most likely, it has another move tomorrow of roughly 35 points. This is going to be a critical level. Once S&P 500 tomorrow reaches potentially 2695, you will see it's going to stall out. That's going to be a level of resistance, and at that point it may not go any higher. At that point it may reverse, and we're going to see a reversal pattern, at which point the important factor to look for would be the volume on the reversal, the volume once the market indexes reverse. If the volume is increasing on the reversal, then we're definitely going to go and hit the lows. This particular area, yes, it's pointed to the volume here, but it's also, I wanted to point out using this area that, as you can see previously on February 9th, the markets did go, or S&P 500 did go below this red line, which is a 200-day moving line, and it actually bridged it temporarily and then it bounced. The markets barely touched this red line this past Friday, the 23rd, and so they did not even, they made an attempt to go a little bit lower, but they really didn't reach the point where we were on Friday the 9th. So I believe there could be a small upside move, after which we will ultimately retest this level right here, and I don't believe we're actually going to stop there. I think we're going to go much lower. If you look at other indicators like MACD, clearly we're still in a very bearish pattern. And what is interesting to note, as you can see, if you were to compare it to this momentum right here, there's clearly more room for momentum to accelerate on the way lower. As the market is trying to bounce higher today on a large numerical increase, we're not seeing that the accumulation and distribution is catching up. Yes, it has moved up a little bit, but this is not enough to create the momentum for the markets to bounce back strongly. Let's take a look at another graph. This time we'll take a look at the Nasdaq. All right, and an interesting thing to know that if we take a look at the volume, we're seeing the exact same pattern. Actually, it's quite apparent that the red volume, the sell volume over the last couple of days, clearly exceeds the buy volume today. Again, when Nasdaq bounced on February 9th, the volume on the way up was much stronger in relation to the volume today. We're seeing the extra bearish signs right here, just like with the S&P 500. We also noticing the gap right here, which when Nasdaq gapped down on Thursday, it breached the critical level, this blue line of the 50-day moving average. Okay, so what could we see tomorrow with Nasdaq? It has a potential upside of 69 points, at which it's going to stall. It's going to get pretty close to this blue line. At that point, it's going to make some resistance. And if the volume is not accelerating, which I don't think it will accelerate, the markets will start fading at some point tomorrow. And I will show you on the next few graphs why I have such an opinion. So looking at this situation, okay, I think this rally is not sustainable. And last but not the least, let's take a quick look at the Dow. All similar patterns we're observing through all three indexes. Again, the volume, we're not seeing an increase in volume as they're buying the stocks today. Even though it is a 670 point move higher, we're not seeing that it is backed up by any significant volume. Again, if we observe the volume on February 9th, it was much higher. At the same time, we also noticed that there was a gap created again on Thursday. Again, if we use the same calculations, Dow's got roughly 298 points on the way higher tomorrow. It may or may not get to that point, but again, this would be the critical level to watch of 24.5, where I think it's going to stall out and reverse lower. Again, the critical thing to look for is the volume on the reversal. If it is increasing, I believe we will breach this level established on February 9th, and we're going to go lower. Important thing to also notice, particularly in the Dow, that if it was to do that, then by Friday, we will see Dow breach this critical level of the 200-day moving average, which is represented by this red line here. And this is, my drawing is trying to emphasize that right here, that it will break this level. And if it does, then the markets could start panicking going into the following week. All right, let's take a look at a couple of stocks. This is what makes me think that this reversal today is not sustainable. Let's take a look. So Google And the reason I'm considering some stocks, because I consider some Google and Amazon and Priceline, which is now trades on the ticker BKNG, is because they're strong stocks. They are market leaders. They're also momentum leaders. They're also a good representation because every institutional investor has money invested in the stocks. So what am I observing in Google? Did it go up today? Yes, it did. However, a very important thing to notice, it went up today only 2.68%. How does that compare to a Google drop of 13%, 13.22 to be exact? And the way I've calculated that is I've taken this trading level of 1180. Okay, I used the number of 1024. I subtracted 1024 from 1180 and then divided it by 1180 to come up with this measure of 13.22%. Notice I didn't even go to the extent of measuring the lowest point of the day, which is $10,010. All right, so it dropped 13.2% literally within last week, and it only has gone up today 2.68%. But that is not even the most crucial point. The most crucial point to me is I put these two green dots right here. The green dot right here represents the level at which Google traded for a certain amount of time on Friday when the major drop happened again of 423 points. At one point, Google was trading as high as 1164 on Friday, March the 23rd. As strongly as the markets rebounded, it has not even been able to reach the level of 1064. As you can see, it closed at 1054, which is $10 lower than where it was trading on Friday. So the importance of that is this. With such a strong numerical bounce in the market today, it was a piece of cake for Google to go significantly more than $27 higher. But yet it did not do that. And it closed lower than its trading level, which it maintained actually for a couple of hours on Friday. It closed below that. Same pattern we're seeing with the volume, as you can see right here. On the way lower, we see negative volume consecutively 1, 2, 3, 4, 5, 6 days in a row. So it finally bounces today, not by much as far as the percentage. Because Google has gone down, there were days when it's been going down 40, 50 bucks, right? So it only goes up 27. What can we expect from Google? Well, I think it could reach the level of 1080 at some point tomorrow, after which it will reverse. So that's what that number 24 states. And again, there was a gap on Thursday. So once it gets here, we will see some hesitation and possible reversal. The importance of knowing these things, when to expect the reversal, this would make a perfect entry for a short position. Now, again, these are calculations that may or may not materialize, but this is what I do throughout the day. I measure the temperature. I have a certain strategy in place. I have certain levels that I look for in order to enter in my positions. Okay, so another very important thing to point out, I guess, is it really makes it safer when you enter into a position over the course of a few days. For example, as I have advised some of my students that I work with, that look, today, if the market was to move higher, we're talking about opening some short positions. But it would not be wise, however, to put all your account in one day and open short positions all in one day. Because if the markets do move higher tomorrow, okay, your put options, you're going to be able to buy them cheaper than what you were able to do them today. Now, why wouldn't you just wait till tomorrow to do that? Well, because there is always a chance that the market may not even go higher tomorrow, that automatically in the morning it will go lower. So in that case, you already have a certain position in play. And as volatile as the markets have been, you don't want to be completely out of a position, okay? And clearly we have observed a severe downward trend, so you do want to have some put options in your portfolio. But again, a better strategy would be to space them out and buy put options in certain stocks or indexes, not all in one time, but maybe by 30, 40, 50%, then the next day buy 30, 40%, and add to the position, or space it out even more over a few days. Okay, so let's take another look at the next stock. All right, what do we have here? BKNG. Interesting to know, okay, that even though it only dropped from 2,200 to roughly 22,090, look at what happened to the accumulation distribution. Since it hit 2,200, they've been doing nothing by selling it. Yes, the price did not change by much. It's only $110, which, you know, for Priceline, that's not much. Okay, that's a very small percentage change. I mean, we've seen Priceline, like here on certain days, drop close to 300 bucks, okay? So that's a small percentage change over the course of a week. But also notice, yeah, I know $46 high seems like a lot, but look, in percentages, it's only 2 percentage points. What is my point here? Well, I'm saying on a day like today, BKNG should have moved much higher. It should not have closed at 21.33. It should have been closing in the range of 21.50, maybe 21.60, as strong of a move as the rest of the market has had. Okay, so again, if we analyze the volume, it is going higher on lower volume, which is a bearish sign. Okay, we're observing that the accumulation distribution clearly in a complete sell-off mode. We're observing the bearish sign here as the stock is reaching its stop. Your MACD indicator shows that they're using this timing to sell the stock. All right, and last but not the least, Amazon. What's going on with Amazon? Well, clearly it has outperformed every other FANG stock today, but how good is it? Well, if we take a look at the volume indicator again, there's a lot more volume on the way down. Now, it does have a pretty good support around 1,500 level, so it is natural that it is bouncing off of it. However, there was a big trade today. Somebody was buying a bunch of 1,600 strike calls. Now, please understand this. In order for somebody to buy a huge number of calls, somebody has to have the desire and the ability to sell them that many calls, who also thinks that there's no way the stock is going to get there. So who's going to be right and who's going to be wrong? We will find out. However, looking at the MACD indicator, Amazon is in a bearish trend right now. Looking at the volume, we have a bearish trend confirmation. Looking at the accumulation distribution, as strong of a price move as the stock has had today, we should have had a much larger increase in the accumulation. But clearly, because the volume factor is missing, even though the price appeared to move much higher, the stock actually, they have not really been buying it. So what this tells us, yes, there is a little uptick in the accumulation distribution indicator. However, this small little uptick tells us that as the price was moving higher, there were plenty of people that were using this opportunity to sell, and ultimately there were more buyers than sellers, but there were a good number of people who were using this as an opportunity to sell, not buy. Here's your case of divergence. The stock trades really close price-wise at 15.55. Will put us right over here where a prior gap has occurred. Since then, it closed the gap. But at that point, the RSI on Amazon was in the range of maybe 65. So clearly, you see it has moved to the same price range, but now RSI is 55. So what does this tell us? As the stock is moving higher, the relative strength index is not at the same level as it was at the same price prior. And this is a case of a divergence. So as bullish as this graph looks, as perfect as Amazon could be in everyone's view, I'm clearly noticing enough bearish indicators for me to use the opportunity, if it goes any further higher tomorrow, to buy some put options on this stock. So I will close with this. As you probably have heard in the news today, Bitcoin has been dropping again. Now, I have been using Bitcoin indicator for the last few months to predict the further stock market directions. in my calculations. This is how I have been interpreting this point. Actually, the bright blue and red represents the Bitcoin price action. The red and green represents the S&P 500. From here to here, this move was matched by S&P 500 from here to here. The next downward move in Bitcoin was from here to here. It is currently in process being matched from here to a potential point right here. And at some point, clearly you see right here that the market, the Bitcoin did go higher and then it went lower. Clearly there's 2 days on this graph. So I think we may be going exactly through this right now, even though they're not identical, but clearly we're seeing a small uptick in the indexes in the stock markets today. But overall, I believe the trend is down. If you have been curious how to make the money when markets fall, please visit marketcrash.money and get some additional information. Specifically, I have compiled some interesting reasons why stock market crash 2010 is a definite possibility, why we could be going for another Bitcoin crash, and more importantly, how to not let the market crash or the Bitcoin crash take advantage of you. Find out how to profit. If you're a new trader or an experienced trader, but you're looking for new ideas, new ways how to take advantage of the market fall, because quite honestly, markets do fall much, much faster than they go up. So it represents, for a trader, a great opportunity to profit on the opposite direction of the market in a much shorter time frame, and oftentimes maximize much bigger returns. So if interested in knowing the ways how I trade weekly options for huge profits as much as 3,800% to 5,000% on certain days, get in touch with me. Visit this link right here, how to profit, read some information, and schedule your consultation. I'll be glad to help out and get somebody on the right track and show you some of my profitable ideas and share some experience which I've accumulated over the last 30 years trading weekly options. Thanks for watching. I hope this was helpful. We'll see you soon.